international trade is hugely beneficial to consumers in providing or offering lower priced products. And of course, if we shut down that trade, that's going to be a very significant problem.
Hi, everybody. I'm Aaron Wudrick. I'm the director of the Domestic Policy Program here at the Macdonald-Laurier Institute. Pleased to be joined today by Jack Mintz, one of our distinguished fellows, to talk a little bit about an issue that we've been writing a lot about lately, competition policy in Canada. Now, Jack, as you know, the federal government just had a consultation on rethinking the Competition Act. There's sort of two schools of thought on this. One is that we need a sort of top-to-bottom overhaul of competition law. It's not working for Canadians, and we need to take a completely different, perhaps more aggressive approach. And the other school is that competition law is not fundamentally broken in Canada, and it maybe could use a little updating, but doesn't require a top-to-bottom overhaul. I guess I'm wondering where you sort of fall on that continuum.
Well, I think actually we need to go back really to what the competition policy is trying to achieve, and the historical evolution of it. Back many years ago, competition policy was really based on what's called a structural analysis. You kind of look at the share of a company's its market share, and if it's too high, then you automatically assume that's bad. That's going to be bad for consumers. They're going to be facing higher prices, and so just looking at the structural market, the structure of the market ended up being a basis for whether government should limit the size of, or oppose a merger because there was too much of a market share that was going to be involved. Then later on, and it was due to Robert Bork in the United States, but it's really just basic price theory. It became a different view, in which was argued that the question is whether a merger or an acquisition would actually lead to higher consumer prices or lower consumer prices, because an actual merger really has two different impacts. One impact is, of course, could potentially increase market share, and that would cause consumer prices to go up, and that would be a concern. On the other hand, if the merger creates economic efficiencies and lowering costs, or maybe more innovation, things like that, then consumers could end up actually facing a lower price in the end, not a higher price, because of those efficiencies. And so that became actually quite commonly used in a number of countries, including Canada. And recently, there's been a view that, well, that's not good enough. You may get people that are going to be fired, or et cetera, so that therefore we should start looking at other factors that could be influenced by a merger or an acquisition. But in the end, actually, what I'm seeing, particularly in the United States, under their new leadership that's taken over, that there seems to be a move back to the structural approach. It's just as soon as you have a higher market share, we're going to oppose it. And I think that's not very good for an open economy like Canada, where lots of competition can come in through import competition. And I'm not totally convinced that giving up the Bork type approach to competition policy is very wise. And if we start getting into a whole bunch of other factors, cost benefit analysis, basically, I think that's a mug's game. And in fact, other policies should be addressing some of these issues, and not trying to rely on a single policy to solve all economic issues.
Yeah, fair enough. I think it's fair to say most of us at MLI share that view that competition policy is not a Swiss Army knife. It's got limited purposes, and those other things, as you say, may be important, but you've got other tools for those. I want to get your thoughts on whether or not you think a lot of this discussion, the renewed discussion around the need for competition, it seems to me a lot of it is really just the real focus is what we call the digital economy or the tech giants. It's framed as sort of competition writ large, but really it's about Google, Facebook, these sort of big tech giants, and that there's something fundamentally different about these businesses that competition policy can't address. But I'm wondering about whether you think that focus is misplaced, and we have a lot of traditional sectors, everything from banking to airlines to telecoms, which could use a little more competition, and that actually, entities like Google and Facebook are not the biggest concern right now.
Well, actually, I think that's a really important point. I think, first of all, we have to go back to looking at Canada as a whole. And we have to remember that actually governments end up creating a lot of barriers to entry. And competition is important. I think it does put pressure on managers. I think it does force companies to operate more efficiently. But where you see a lot of protection for industries, because we don't want to let someone go bankrupt, or we want to avoid foreign ownership, and now we're getting into this supply chain resiliency, and so that's going to create some more barriers to entry, I think, in many industries, and that has actually been the Canadian case for a very long time. So, telecommunications, by the way, where everyone was hepped up about high prices for cell phones, which of course there's some argument, especially made by my colleague Jeff Church at the University of Calgary, who's shown that that actually the data doesn't really support that Canada has high cell phone prices once you allow for quality differences, across packages and things like that. But if you look at the telecommunications industry, we don't allow any foreign competitors to come in. We don't allow it in banking. We don't allow it in a number of other areas, including power companies, which are primarily provincial owned, except for in Alberta, where it's a more deregulated approach to power. And so when you start going through the Canadian economy, you start seeing a lot of protected industries from competition. And if we really want to open up to more competition, we have to change the regulations. It's not a matter of changing competition policy.
Yeah, and speaking of barriers, I mean, you've already touched on barriers to foreign ownership. What about internal trade barriers? This is something as you probably know, we've done some work on, but I don't think a lot of Canadians are aware of the number of internal trade barriers and what the impact that has on the Canadian economy.
Well, internal barriers is another way of trying to limit competition across provinces. And some of those things are in the service sector, particularly professional qualifications, or whatever qualifications, even for all sorts of different types of jobs. It doesn't have to be lawyers and doctors, but it can be hairstyling and all sorts of other areas. We have been very slowly moving towards a freer internal market. In fact, there's a very good book that just got approved, that just got the Donner Book Prize, that gives a great review of internal trade over the years. There's a problem with some of the empirical work that's done in this area, because people kind of just observe, some differences in prices across provinces or whatever, but they actually don't explain what those differences are, and they attribute it to internal trade, but we don't know for sure. And so I think, but I do think there are significant gains that could come from better, from more, let's say, competition that would be induced by taking away some of the barriers associated with internal trade in Canada. But of course, it's a very long road to hold, and because provinces are also very protective of particular industries as well.
You alluded to this a little bit earlier. We talked about, protectionism against foreign competitors, protectionism between provinces. You alluded earlier to this new sort of supply chain insistence. You call it, reshoring or friendshoring. I'm curious as to what you think. I mean, there is an argument, obviously, with the rise of China and their attempts to sort of put a stranglehold on supply chains around certain things like critical minerals. There's now a sort of national security element. In your view, there's room for some exceptions here? Are you worried that these exceptions are going to start to become exploited for anyone who wants to make any sort of argument about protectionism for any sector? How do you see that sort of debate evolving?
Well, I do worry, actually, that this is going to expand into something that's much bigger than what people are talking about. I think we have to be much more clear on what areas of resiliency we're particularly worried about. I mean, I've seen lots of people refer to food security, and now we should be growing our own bananas in Canada. Sure. I've seen lots of references to, different types of other products. But we have to remember, international trade is hugely beneficial to consumers in providing or offering lower priced products And of course, if we shut down that trade, that's going to be a very significant problem. And of course, one of the areas that we're starting to see a huge amount of government intervention in is part of the energy transition, where all of a sudden we're going to be having our own, hugely subsidized electric car companies in Canada. That right now, if we continue going down the road, those subsidies are going to break the bank, and we're also seeing, of course, critical minerals subsidies. I do a lot of work on mining taxation. I can tell you that the mining in Canada is we have the most competitive tax system amongst all the countries around the world when it comes to mining. And just adding on another tax credit, as we did with critical mining, has been absolutely unnecessary. And I think this is part of the problem right now. We get governments going overboard on trying to, let's say, achieve this resiliency. But then they also start adding on a whole bunch of conditions associated with their subsidies, that takes away some of the juice associated with the subsidies. People don't talk about that. But I've, over the years, worked on tax holidays across many countries, and there are all sorts of conditions associated with them. And as a result, they don't attract the investment that people think they attract, because governments make it too difficult to claim the subsidies in the end, because you got to have, unionized workforce, you have to have a domestic partner, or you can't own the land. There's all sorts of conditions that different countries use in order to when they start giving out handouts.
You talked a bit about the green transition to the green economy. That's sort of my last question here. I want to talk a bit about the impact of the Inflation Reduction Act in the U.S. We've seen, of course, already in Ontario in particular, these deals for Volkswagen, and this perhaps a new deal looks like for Stellantis with their Windsor plant. These are massive sums of money, as you say, the sort of the usual sorts of business subsidies. $1 billion used to be a big deal when it was now we're talking about tens of billions potentially for both of these plants. Where do you see this ending? Why do you think there's been this renewed appetite? Essentially, why have the limits that used to sort of be implicitly there been blown off, and now it seems that governments are prepared to literally spend anything it takes in order to get these types of plants in Canada?
Well, I think this is a real serious issue now, I think, that the world is facing, and it's been launched by Biden through his subsidy war for green energy, which has been these very generous subsidies that are actually going to cost the U.S. government a pile of money. I mean, they originally forecasted less than $400 billion in expenditure for these subsidids, but everybody knows they're probably going to end up well over $1 trillion, within the next 10 years, and who knows how much it's going to be, because it's really juicing the system, so to speak. And as we know, U.S. has a huge deficit and has been growing debt, and as people have been remarking during this debt limit crisis that just got resolved this week, that the United States is starting to really get into a position where it may have a very serious debt problem and a credit crunch if they're not very careful. And yet they've launched this subsidy war, and in Canada we're just duplicating it, which and there's this cry by the business sector: you got to match the U.S. subsidies, you got to match the U.S. subsidies. But can we really afford it, or are we willing to give up spending on healthcare? Are we ready to raise taxes by a huge amount in order to pay for these subsidies? The Volkswagen one, I think, is just absolutely outrageous, costing a huge amount of money per worker, 3,000 direct jobs being created, by almost $15 billion in federal and provincial subsidies given to Volkswagen, which is almost 3/4 of the cost of the operating and capital costs of the project. I mean, this is absolutely insane. And now you're getting Stellantis coming along and saying, "Oh, we didn't get enough, and we're going to close down the facility, our construction, and go to the United States where the subsidies are better." And now they're threatening to pull out. And what's the response? Well, the Canadian government is ready to throw more money at a project which is going to cost a huge amount of money. And so then we start asking the question, like, why? How are we going to control all this? We don't have the same kind of financial wherewithal as the United States as a reserve currency around the world. The U.S. it will take a lot for it to lose its credit standing, because so many people use the U.S. dollar as a fundamental or as a medium, as a fundamental medium of exchange. But Canada doesn't have that ability to just simply run up deficits and debt as much as it wants without starting to have a very significant impact on our own, financial health. And so, and at the same time, there's a lot of spending that we don't do that we need at the public sector level. And of course, our taxes are kind of in the middle of the pack. We're not the highest in the world, but we're not the lowest either. And so, and if anything, we have a very serious problem of lack of private sector investment in this country. So, I think we could be entering into a game that might be very dangerous down the road. It may actually impair the Canadian economy in a very significant way.
Yeah, fair enough. Wish we could end on a happier note, but I think perhaps it's a realistic one. So I want to thank you very much, Jack, for joining us to me, and to you, our viewers and listeners. We'll catch you next time.
My pleasure.